Hello, my name is Mike Florin, and this is your weekly update for August the 25th, 2023. This is for realtors and industry professionals, so if you're a regular mortgage consumer, some of this stuff might not make sense because we're kind of quickly going over things. But anyways, let's look at interest rate trends. In the last few weeks, the last few months, we've seen nothing but rates go up. And I want to pop up a 6-month trend. And if you notice in that 6-month trend, rates are going up. But they'll come down for a few days, and then they'll go back up. And they'll come down for a few days like what we have right now. Is it going to continue to go up? Well, let's look at the 5-year and the 1-year trend. And I'm going to pop those up over my left shoulder. The 5-year trend shows where we were a few years ago, which was the middle of the pandemic. Rates were low. But it also is going to show you how rates have come up. They've come down. They've come up again, down, and then back up again. So you can see kind of this narrow, not really narrow, but by perspective of a 5-year period of time, it seems to be hovering kind of in this zone, if you will. And right now, rates are at the top of that zone. And if we look at the 1-year chart that's also on my left here, you're going to see that it's a little bit more magnified. It came up, down, and that's where we are. So rates right now are roughly a little higher than where they were last October. Will they bounce and come back down? We don't really know. The Fed has said that they're going to increase rates probably again the next time they have their meeting, or at least they hinted at it. But the data's been pretty stable recently. So if the jobs report looks good and the inflation report looks good and the data comes in and it looks as predicted or within what the market's expecting, rates will stay roughly about the same, or they should, or have downward pressure, because the stability comes lower rates. Now, all it takes is one piece of bad information to come out, like 2 months ago when a jobs report came out after the Fed did no increase. So the Fed, 0 increase. Then the jobs report came out and rates took off like a rocket because it showed that a lot more jobs were being created than were anticipated. So it just takes one or two pieces of bad information or bad data, or not really bad data, just information that comes up that might look a little bit wrong, and everybody in this industry right now is on their tiptoes, and they'll just start increasing rates. So you're going to see that if we get another piece of information like that. Now, that being said, we're going to talk about something else, which is interest rates and the cost of rate. And this is day by day, right? This is loan by loan. When you're comparing loans, it doesn't make sense to compare just the rate. And the main reason is there's two pieces to it. You have the rate and you have the cost of the rate. Now, a lot of realtors don't understand this. I wish you did, but there's quite a few of you that don't. Some do, some understand it really well, some really don't. And so you're doing your clients a disservice if you don't explain it to them in such a way where it makes sense for them. And there are some realtors that I've seen pushing their clients to lenders that are really, really expensive, But anyways, I'm going to pop up a loan estimate here. And this is from a realtor that we work with a lot. And he calls me up and he says, hey, this other lender, the rate that's very similar to yours, check it out. Well, let's look at this loan estimate real quick. And I've redacted some of the private information, but let's look at it. Mid-7s on the interest rate. Okay, that's kind of close. But look at the cost. The cost is $26,000. So in order for that other lender to get close to our rate, well, we had, for that particular scenario, a similar interest rate at a $1,200 cost, and this other lender, $26,000 cost. That's absurd. This happens all the time. This is happening everywhere. And that's kind of an annoyance, if you will, which is why I'm explaining this, because it's happening all the time. So when you're comparing rates, I'm going to break it down here for you. We're going to break it down Barney style. That's what we call it in the Marine Corps, right? Barney style. So you take your rate, and the interest rate is going to be page 1 of the loan estimate, right? Page 1 of the loan estimate, it's going to say interest rate. Then the cost of the rate. Cost of the rate is going to be block A of the second page, top left corner. So when you're comparing rates, what you want to do is compare the interest rate and the cost of the rate. That's the only real way to compare it. The interest rate alone doesn't mean anything. The cost of the rate alone does not mean anything. But the interest rate and the cost of the rate together actually give you a picture of what's going on. And that's how you want to compare lenders. Interest rate, cost of rate, right? All right. Well, anyways, my name is Mike Florin, and I'll talk to you later. Oh, wait, hold on. One last thing. When you're comparing rates with other lenders, what you want to do is call 2 or 3 other lenders and have them price out what their rate would be for a set cost of Block A or $0 in Block A. So for example, when you get our little interest rates in the email, it has in there what the credit would be or what the cost would be for a specific rate. And we try to overly simplify it for you. So when you're comparing other lenders, what you want to do is say, hey, lender 1, if the Block A fees are 0, what is my rate? Hey, lender 2, if the Block A fees are 0, what is my rate? And that's where you want to compare lenders. And if you're comparing a certain interest rate and you want other lenders to get close to that rate, don't just say, ooh, look, they match the rate. You got to say, okay, lender 1, here's the rate, here's the cost of the rate. Lender 2, here's the rate, here's the cost of the rate. Ooh, maybe this cost is $10,000 more or $4,000 more, or maybe this cost is $5,000 less. You'd be surprised on how big of a difference there is between lenders, especially today. It's a bit ridiculous. So anyways, finally, I'll see you guys later and have a great day. Talk to you later. Bye.